What's up, everyone? It's Scotty with MoneyVest. Let's talk about Enphase Energy. I think it's time. So we're going to talk a little bit about what's happened over the last, I would say, couple of weeks. Of course, the stock has rallied quite a lot in the last couple of weeks, actually 3 weeks since October lows. It's up over 70%. I'm going to break down the catalyst. I'm going to break down some of the fundamentals and, of course, go over the technical analysis. As always, if you enjoy this video, find it helpful, make sure that you drop a like. All I'm asking is that you subscribe to the channel. If you haven't already, I would really appreciate that. And links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. There's over 40 plus tutorials, lectures. I'm posting videos every week, every so often for all the members. And of course you get access to all the spreadsheets with my watch list and what stocks I'm actually planning to buy with my fair values, and the Discord channels with over trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be included with the link down below. And of course, do check out my Instagram. Handle is going to be CastWRP. We'd love to connect with you there. You get access to all my stories where I'm posting my portfolio updates, videos, polls, strategies, all these different things also included with the link down below. So fund manager says Enphase Energy stock is a market share leader. This was a recent catalyst. And let's just start from what actually happened with Enphase. Let me just close this out. But let's just start with what happened with Enphase Energy after the earnings. In fact, let's just go back even further, right? So if you take a look at Enphase all the way up to as much as $336 in December of 2022, right? So literally about 1 year ago, if you go back exactly 1 year, Enphase was at an all-time high at $340 per share. Of course, since then, we have seen the stock price plummet over 78% on the back of significantly increasing yields. Because if you come over to the 10-year yields at December of 2022, we were pretty much at sub 2%. If I remember correctly, we were actually sub 3% back then, and we rallied a little bit over 92%. Right? So in my opinion, right? So from a macro perspective, this was a direct hit on solar renewable energy stocks and even the likes of other high growth discretionary companies that depend very much on lower borrowing cost. Because in my previous updates and videos and Discord channel updates, I've mentioned that yields being as high as they were at over 5%, a lot of companies have never in their business cycle experienced yields as high as they were at over 5%, because we saw the 10-year yields and the 20-year and the 30-year, the interest rates at over 5, 6, 7%. We haven't seen that in over 16, 17 years. And a lot of the companies haven't been around for that long. Of course, Apple's been around for that long. Amazon's been around for that long. Nvidia has been around for that long. Meta's been around for that long. But a lot of the companies, including Enphase, has not been around for a very long time. I mean, that's why they haven't really experienced what it's like to be in an environment where rates are so high, where borrowing cost is so high that consumers are going to pull back on that discretionary spending. So for those very reasons, we talked about how there is a dynamic with respect to the macro aspect of Enphase. Of course, the stock was incredibly overvalued at over $339. In fact, we had a short trade idea, believe it or not. We had a couple short trade ideas on Enphase when the valuation was so darn high for this company, and of course that worked out really well on the way down. But the markets obviously love to overshoot both on the upside and on the downside, and they overshot on the upside here, which ended up being a very nice short trade idea. And in my opinion, as I mentioned before, after the earnings, after consistent hits on the earnings, the markets overshot on the downside when it comes to Enphase Energy at sub 75, sub $80 per share. And of course, from those levels, the stock is now up over 70%. And in my opinion, this is only the beginning, because the company quality, the quality of the business continues to be very strong, which is exactly what we are going to discuss in this video. But this right here is a recent catalyst, so the bull case for Enphase Energy. So Stephen Glass of Pella Funds says 50% year to date decline in Enphase is an opportunity to invest in a market share leader. He expects Enphase Energy stock to benefit now that the FOMC has signaled 3 rate cuts in the coming year, while solar rooftop penetration remains low. And Glass recommends that investors take a long-term view on the solar stock and not be overly concerned about its performance in the near term. Like, this is literally word for word what I've also mentioned in the Discord in my previous updates on Enphase, because short-term stock price performance is probably one of the worst indicators of a long-term company performance. I'm going to repeat that once again. So a short-term stock price performance is the worst indicator for long-term company performance. okay? Because in the short term, the stock can go higher or lower or sideways all over the place, but that does not mean anything. What matters is the long-term company financials, the fundamentals, and that's true if you're investing in a company long-term. If you're trading in a stock short-term, then all you're going to be focused on, of course, is technicals and price action and momentum. But if you're investing in a company long-term, all that matters to you is the fundamentals, the financials, the strength of the company, the business, the moat, and what is the long-term view with respect to the industry that it belongs to. So Stephen Glass remains bullish, even though the NASDAQ listed firm failed to meet street estimates of our revenue in the latest reported quarter as well. And this right here also, to me, seems very much of a made-up negative catalyst because the company's fundamentals were incredibly strong. I'm going to go over that in just a minute because I talked about this in my previous update when we broke down Enphase's financials. This right here is another report from Jefferies analyst Dushyant Ilani, who also reiterated his buy rating on Enphase and his price target's 145, suggesting about another 20% upside from here. I'm back in the black with Enphase. I was obviously down significantly because I was buying in the low hundreds as well with Enphase Energy being so low, and I'm back in the green. A few of my shares are still down about 10-12%, but I expect them to be back in profitable zone as soon as Enphase pushes higher even further on the back of these dropping yields and rate cuts going into 2024. Now this right here was obviously the report from October 26th for Enphase for the third quarter. And one of the things that I highlighted in that video was simply this, right? Of course, Wall Street will try to project the company missed earnings, missed revenue. This was a terrible quarter. But if you take a look at the numbers on an absolute basis, like literally just compared to last year on a 9-month basis, right? How well the company is doing on the first 9 months versus same time last year, we're still up on revenues significantly, right? So 1.6 billion to almost $2 billion. Gross profits up 50% from 600 million to over 900 million. We've got operating income that's up from 291 to over 455 million. Net income is up from 243 to over 418 million. We have diluted earnings per share that's up from $1.70 to over $2.92. That's almost 100%, not 100%, but close to 75-80% gain. Every single line item that actually matters was up, right? And that's what really was frustrating at a point where Enphase was down so much in the 70s. Like, I was really scratching my head. I was like, what the heck is going on? The company is growing revenues, growing profitability, growing margins, and net income's up, and diluted share count is up. Shares outstanding is not up that much, only up by about 1 million shares. And I was like, the stock's still down. It is absolutely crazy. And the balance sheet continues to be very strong as well. So if you take a look at the current assets, so cash equivalents, and marketable securities at about almost 1.7, 1.8 billion dollars for the company. And we've got total assets sitting at 3.5 billion. And we've got long-term debt, right? So debt right here, non-current, sitting at 1.2 billion dollars. The company's got more cash than debt on the balance sheet, more current assets than more current liabilities, and more assets than total liabilities. And again, the balance sheet's phenomenal. And this right here is the earnings expectations, trading at a reasonable to somewhat expensive forward price earnings at over 28. And then of course, dropping that all the way down to 11 as expectations for EPS are much higher over the long term for the company. So not saying that Enphase did not deserve the drop that it had, not at all, because the macro picture was very concerning with higher interest rates kind of affecting the overall demand for the business. Not to mention the valuation was extremely high when it was at over $300 per share. But the idea is that, of course, we do overshoot both on the upside and on the downside. And at $70, when you're looking at almost $5 in earnings per share, it was trading at a 14 times price to earnings multiple. So where do we go from here? It's simple. It really is going to be dependent on the yields, right? The yields are really what's going to be moving the price moving forward, especially when it comes to consider solar renewable energy stocks, including Enphase. So if yields continue to drop, if rates potentially get cut in 2024, I could easily see Enphase in the 130s, 150s, possibly in the 170s again, seeing a lot of demand come back in to this renewable energy solar space. And of course, that momentum carrying the stock higher. But the next target and next resistance is going to be $131, $132. So this right here is going to be that level to watch. But of course, we are now overbought here with the RSI and the MACD as well. So got to be careful with that as well. So next target, 132, all the way up to $151 for Enphase. And let me know your thoughts down in the comment section below of what do you think about Enphase Energy moving forward, going into 2024. It happens to be one of my highest conviction stocks in 2024, just considering the rate expectations that we have, and they're potentially going to come down on the back of maybe inflation slowing down or any chances of a potential recession. Either way, there are expectations that interest rates are going to be lower 12 months from now. And as a result, Enphase, in my opinion, could be one of the best performing stocks going in next year. But let me know your thoughts down in the comment section below. I would love to know from you guys as well. As always, if you enjoyed it, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Definitely do check out the Instagram. Link's going to be down below. And definitely do check out the Patreon and the Discord link. I did open up a few more spots with that 16% annual discount. And as always, happy investing. And I will see you all in the next video.